Welcome to the Fear and Greed Afternoon Report for Tuesday, the 4th of October 2022. I'm Sean Aylmer. Every afternoon we've got the 5 stories that happened today that you need to know about. And it was quite the day. Story number 1. The Reserve Bank of Australia lifted the official cash rate by 25 basis points, less than consensus forecasts of 50 basis points. The Reserve Bank board said while more rate rises are likely, the official cash rate has jumped sharply already and, effectively, the central bank wants to take a breather and see what's happening to inflation and economic growth. It certainly shows that the Reserve Bank has one eye on growth as well as inflation. The bank made it clear that inflation remains too high due both to global factors and strong domestic demand. It expects inflation to keep rising before eventually falling back towards its 2 to 3% range. Importantly, medium-term inflation expectations remain well anchored. Story number 2, the S&P ASX 200 closed up 3.6% today to 6,688 points. It was already surging ahead of the Reserve Bank announcement, then it went into overdrive. In short, investors were buoyed by the likelihood of fewer interest rate rises, which in turn shouldn't harm the economy and earnings as much. Where the decision had some of the biggest ramifications, though, is in the bond market. Investors have been wary about buying bonds, fearing that higher interest rates in the future will make bonds bought today unattractive. But the shift in sentiment about the course of future rate rises triggered a reassessment. Investors started buying bonds again, pushing up their prices, and as a result, yields fell. The yield on a 1-year Australian government bond fell 36 basis points, or 11%. To 2.83%. That's quite the decline. The decision didn't help the Aussie dollar. It had rebounded ahead of the announcement on the back of data out of the US suggesting the Federal Reserve may not lift rates quite as much as expected. But then the smaller hike in rates was announced and the Aussie dollar lost half a US cent. Since then, it's been clambering back and is currently trading around 64.7 US cents. Story number 3, the value of lending for housing dropped 3.4% in August, with investor lending tumbling most. But there was some good news, with first home buyer lending up sharply, presumably thanks to the drop in house prices. Lending for investors fell nearly 5%, lending for owner-occupiers was down 2.7%, while lending for first home buyers jumped 7%. Total housing lending is down about 12.5% over the past year. There will be further drops as interest rates rise. Story number 4, Canadian suitor Dye & Durham have lobbed a $1 million bid for the corporate markets division of Link Administration. If you can't get the whole business because of pesky UK regulators, how about just bidding for the piece you really want? And that's the corporate markets business. It provides shareholder management and analytics services, including share registries and company secretarial support. According to media reports, Dye & Durham made the offer, but Link isn't that interested. And story number 5, Wall Street finished its best day since July this morning as investors reassessed how high the US Federal Reserve will lift interest rates. Weaker than expected manufacturing data in the world's biggest economy triggered the surge, with the broad-based S&P 500 finishing up 2.7%, while the tech-heavy Nasdaq closed 2.3% higher. It was both indices' biggest gain since August. US bonds also rallied sharply, pushing their prices up and their yields lower. It wasn't all good news, though. Tesla's share price fell about 9% on the back of its announcement over the weekend that it sold fewer than expected EVs last quarter. That's it for a very busy day on Tuesday, the 4th of October 2022. Michael Thompson and I will be back tomorrow morning with a Wednesday edition of Fear and Greed. I'm Sean Aylmer. Enjoy your evening.